what's the impact of rates on on crypto, any markets. So the idea is the rates, when you raise rates, you're gonna reduce money from the markets. So you're gonna reduce the money supply, right? But when you lower rates, you're gonna put more money into the market. That's the easy way to put it, right? So when you look at crypto and you see interest rates rising, why does it affect crypto? Because interest rates rising means that gonna be less money in the markets overall globally. So when you have less money, so the dollar gets more valuable, and Bitcoin trades against the dollar. So Bitcoin is probably gonna fall against the dollar because the dollar is going up, right? Unless Bitcoin is so bullish, so good that it gets more value than the dollar, right? But that's the impact of interest rates and bonds, if you think about it, on on crypto, right? So when you look at interest rates, you have to know how it's going, how is the trend in interest rates, how it's going to be this trend in next year or whatever, and then you're gonna look at crypto, let's say, and expect something based on that, right? So that's how the main idea of trading bonds and their relation to crypto or even stocks as well. It's pretty much the same way for stocks. When interest rates are going up crazy, there's less money in the market, and people want to just put their money to make more money on interest rates instead of risking and pull out our money in stocks that you have no idea what's going to happen the next couple of months, let's say. But the good news is that when you control inflation, you have to lower interest rates later on, right? So you, because if you have a very high interest rate, you're gonna have less money, but you're gonna have less jobs. The economy is just gonna slow down, right? And at some point, they will look at it and say, we have to put this back into track. We have to lower the interest rates and put the market to go to the full send mode, let's say, and then get more jobs, put more money to companies, lend more money, and then you have another crazy uptrend for a bunch of years or whatever, right? But these recent interest rates, um, like media, all the media talking about the fact that it has gone up a lot. It's interesting, and I think it's important because we were going crazy in the markets and the interest rates were so low that I don't think there was even that much downside potential to go, right. And now
Yeah.
we are kind of resetting that. We are interest rate that it's already pretty high, I think, at the moment, but at some point it's going to start to lower again. But now we have more downside, we have more to go, we know what's going on. I think it's going to be a much more healthy situation for the global world, for USD or for the dollar itself, right, than before. But yeah, that's
Yeah,
how you view
definitely.
bonds and crypto in a superficial way, right? The fact that you know how to see, you need to know to understand more bonds to know what's going to happen with it. That's another thing. But that's how you you correlate interest rates and crypto. It's not something though that just instantly affects crypto. So let's say interest rate just goes down massively tomorrow. It's not something that's gonna instantly make Bitcoin go up crazy. It's not something that just impacts the markets instantly. It's something that impacts the market over the months, over the years, right? So it's not something that just instantly changes everything.
Right. Exactly.